Hello, and welcome to Explain the Charts. Today is March 14th, 2025. We're taking a deep dive into the SPY, looking at both the current news and the technical chart data to help you make informed trading decisions. The S&P 500 has officially entered correction territory, dropping over 10% from its recent high. News is dominated by President Trump's latest tariff threats, which are sparking concerns about an escalating trade war with Europe and other countries. This uncertainty is weighing heavily on investor sentiment, but some analysts believe this pullback is a normal part of the market cycle and doesn't necessarily signal a prolonged bear market. Today, we'll examine key price levels and potential support and resistance areas to assess whether this dip is a buying opportunity or a sign of further declines to come. Let's start by looking at the one-day chart. We can see the sharp sell-off in the last few days, confirming the correction. It is visible with the large red candles. However, we also see a slight bounce today, suggesting a potential short-term recovery. Now, let's zoom into the one-hour chart for a closer look at this recent price action. On the one-hour chart, the bounce looks a little more significant, creating a potential short-term uptrend. However, we need to be cautious as the overall trend is still downward. The 565 level seems to be acting as resistance. Switching to the 15-minute chart, we can observe the most recent price movements in greater detail. We can see some choppy price action as the market tries to recover. There's a lot of back and forth between buyers and sellers, contributing to the uncertainty. We are still in correction territory, so being bearish in the short term could be beneficial, especially if we break below 550. Long term, if we break past 580, we could see much higher prices later in the year. Important price levels to watch are the recent low around 550, which could act as a support, and the previous high around 580, which could act as resistance. If the market continues to sell off, breaking below 550, we could see further downside towards 540 or even lower. On the other hand, if the market breaks above 565 and then 580, it could signal a more sustainable recovery. Given the news of tariff threats, the likelihood of breaking 550 is high, possibly 60 to 70%. If the tariffs are withdrawn, however, expect that to reverse rapidly. Overall, the market's direction will likely depend on how these trade tensions resolve and the impact they have on the global economy.